Welcome back. We've had a spectacular start, I think, to our day. We heard from the Dean about the need for discipline, clarity, and trust. We heard from the man from the IMF about how incredibly interconnected we are. And he left us with some specific thoughts about a reform agenda for China. 10 bullet points that were meant to provoke, titillate, but not yet illuminate. That is the job of the current panel, where we're going to delve deep into China's economy in transition. With me, two distinguished experts on the topic. Of course, to my immediate left, known to many of you, Professor Michael Spence, Nobel laureate, as well as the Berkley Professor of Economics and Business at Stern. He's also the co-author for the Chinese government of Medium and Long-Term Development and Transformation of the Chinese Economy. A relevant topic, I should think, for our panel. And we have, to my far left, Mr. Yide, Vice Chairman and Secretary General of the Shanghai Development Research Foundation. So thank you both. Welcome to our stage. We have a good amount of time, but that will fly in no time at all because the topic is so big. The future of the Chinese economy and the path for reform. Maybe I'll start in a way with setting down a challenge to my speakers. It will be very tempting to go down lots of long-winded answers and rabbit holes. I challenge you to give me short, punchy answers. And when we turn to you, because I want this to be an interactive session, I'm going to challenge all of you as well to make questions that are brief, to the point, and witty. Do you all agree that we want this to be an animated and informative session? Let's hear it. All right. Excellent. This is a challenge for any such conference, but I dare to dream, okay? So let's start with you, Michael Spence. When we look at the need for reform, it has been argued, and the case has been made this morning, that China is at a crossroads. Some have argued, and the World Bank quite notably did a few months back, a report where they argued that China is potentially headed towards a middle-income trap, and to avoid that common problem, that China needs to take some important steps, rebalance its growth, the drivers of growth. Do you accept that fundamental argument, that there is an important need to reform the growth model that, at least at face value, has brought China tremendous gains so far?
Yes.
Okay. Look at that. My hero already. I think that's the updated...
Expanding slightly. Look, I mean, there have been lots of countries, even high-speed ones, that entered the middle-income transition. I prefer that word, and about 5 of them so far have kept up the growth rate. And most of the ones that slow down try to stick with essentially, to use the Chinese term, the old growth pattern. And the Chinese policymakers and scholars and researchers know this perfectly well. So these are very major changes, you know, and if they're not made, you could slow down dramatically.
Let me turn to Yide. You told me earlier when we were chatting, you actually have a problem with this term, the middle-income trap. Can you tell me what is it that bothers you? Because this is central to a lot of the analysis about what is the need for a country that has gotten a lot of things right in economic terms, you know, lifted more people out of poverty than really any other government in history. It's gotten tremendous infrastructure in place. The advancement of social indicators, public health, it is quite extraordinary what China's been able to do. Why mess with it? You know, make the brief argument before we go on to what we need to do and why that term bothers you.
No, what I say is I don't like the term because it is not well-defined economic term. The reason is not only a mid-income country will come across kind of a barrier to continue growth, even for low-income country, high-income country, they're same. They will come across same barrier. Maybe the barrier is different, but they will come across some we call plateau. That's something. That's the term people like to use in gym. That's the reason. But at the same time, if people like to use the term, that's fine. Right. I guess one of the audience in previous session asked what's the definition, third word and the first word. According to the definition of World Bank, is they divide the country into low-income country, middle-income country, and a high-income country. Middle-income country is income per capita between $3,800 to a little bit less, $12,000. Now China in the middle, they call upper middle class. I guess by the end of last year, the income per capita in China a little bit more than $6,000. But I think it's great challenging for China to move from middle-income group to high-income group. But I think China can do it in maybe 20 years.
Of course, these aggregate figures disguise tremendous diversity, right? It has been argued, for example, Brazil should really be sometimes called Bell India, because it has a core in Sao Paulo as wealthy as Belgium, and the rest of the population as poor as India. And now we can say much the same. Shanghai, we are in one of the richest places in the world within the next 10 miles of this very fancy hotel. But there are parts of China where hundreds of millions of people live in very poor conditions. And so we have to take it with a grain of salt, what the nomenclature is. I think the deeper point here is the growth model is hitting obstacles, as you pointed out. And so let's talk about what are some of the pathways forward. In this session, we want to focus on a reform agenda. That is, let's think about what China must do to move forward. What are the options? We'll focus in other sessions tomorrow on the tremendous risks as well. There's a session on stability, volatility that we'll come to. But for the moment, let's roll up our sleeves and think about what can be done. With that spirit, much has been made of a rebalancing towards consumption after many, many years in which export-driven growth was clearly the way that China leaped forward. It has become the workshop to the world. Can you talk, maybe we can talk with you, Michael Spence, first, about this rebalancing. What needs to happen for this to happen? And do you buy into this argument that this is now a top priority?
I buy into it, but consumption's too simple a description. This is an economy that has now tremendous growth potential in domestic aggregate demand. At the moment, it's configured with too little household income, too little consumption, and a distinct risk of entering into an investment portfolio that goes into the low return section at the margin. That's a dangerous trap. The best paper I've written on that is Yu Yongding's paper. And again, this is well understood. So you're going to have a different mix of external, on the demand side of the economy, external demand becoming somewhat less important, and then the right mix of consumption and investment decided by savings opportunities and a financial system, a whole system that gets the low return investment screened out and the high return investment left. Chinese analysts say when they hear this consumption-led growth, respond immediately, many of them, that this is going to remain a high investment environment. I actually believe that's true. At least it's a good guess. I mean, look at the amount of investment it's going to take for the urbanization to build all these many companies that are coming. So what they're after now is a set of reforms that cause this to happen. Final comment, and I don't mean to be long-winded, but the household income is now below 60% of national income, and the savings rate is in the household sector is 30%. So that puts most people's estimates of consumption at below 40% of GDP.
Which is low by historical standards for an economy at this stage of growth.
Absolutely, it's low by virtually by any standard at all. And so that configuration is inconsistent with this direction in the evolution of the growth model. And so part of the reform program is income and demand reconfiguration and not just the supply side. China's predecessors, when they got to this stage, were probably a little slow in building up the non-tradable side of the economy, which has to be driven by domestic demand. But they were small in relationship to the global economy, not maxed out the way China is, and they lived in a global economy where the main markets were the advanced economies, the pre-Xu Min's evolving network structure, and those economies were growing. Now they're not growing very much, and China has a huge market share in their part of the tradable sector, so they don't have any flexibility.
So it's harder for China, in fact, to make this adjustment.
They've got to get this transition much more finely tuned and right to pull it off.
So let's turn back to you, Yide. Look, tell us about what are the levers that China has, the new leadership has, to make this transition work? What do you think they're likely to do? I mean, very glibly put, China invests too much and saves, consumes too little. But the more nuanced take, of course, might be that it needs to certainly consume more and invest more wisely going forward. Not that it should stop investing. How does it do this? What are some levers?
And as you point out previously, you can see very luxury hotel in Shanghai. Maybe you still can get lobby, shabby, some shadow in Midwest, because that's the big gap between the coast area and the inland area. Also, I guess that's the reason, one of the reasons why the consumption level in China is still very low, because the rich people have less tendency to consume more. The poor people, because they don't have enough money to consume. So the policy for Chinese government is taking now is to provide more security for all of the people. Then more people can consume more, particularly for low-income people. I guess
this point about security is vital, isn't it? When we ask why Chinese, and again, there are two Chinas, the very, very wealthy and rising middle classes, but the vast majority who are not in that crowd. If you look at the second half, why don't people consume more? Among the arguments that are given, aside from cultural factors, Asians save more historically across economies, lack of meaningful pensions. Healthcare is often the number one reason people save and hoard cash because of worries about what happens when you go to the hospital. In China, many of you don't live here. If you don't turn up with large wads of RMB notes, you don't want to turn up at a hospital in China without ready access to cash, even today. And so tell us a little bit about what are the schemes the government is putting in place on those fronts to build a social safety net that might give people the confidence, perhaps, to consume more.
Yeah, I guess in past several years, Chinese government take a very active measurement to provide more coverage to all of the people. For example, in countryside, almost 100% of farmer can be covered. Of course, the coverage is very, very low. Maybe every month the pension just get 100 Chinese yuan, but they just started to do that. I guess that's the good side. In the city, of course, they have all kind of the scheme. The one point I like to point out, in Zhu Ming's chart, the figure is for urbanization in China is 52% by the end of last year. But among them, only, I guess, 38 or 35 people have a hukou, or call registration in the city.
That is the permit that allows you to live and work in a particular area,
yeah,
called a hukou.
In other words, 16 residents in city now cannot get the same benefit with people with a hukou. That's a big issue, not only for social stability, also for increasing domestic demand. If these people can get same benefit with the original resident in the city, definitely they have a tendency to consume more. Now they save money. Why? They want to build a house in countryside. No one to spend money in the city. That's the issue. I guess Chinese government understand that. They started to try to take some measurement to get things done to improve that.
So there have been signals that the hukou system will be reformed, but this is a challenge, isn't it?
Yes.
There may be, for example, here in Shanghai, there are many people that live here without the legal right to live here, but they don't have easy access to things like schools and colleges, the services that Shanghai residents take for granted. And can you imagine if in your own home city there was a massive influx of people given the right to get into your child's high school, and you might push back and say, wait a minute. And so there may well be a political difficulty at the local level in what might make sense in economic terms to reform.
Let's put numbers on this. The people, this group of people in this ambiguous status, they're called migrants. They're estimated to be about 200 million in a population of 1.3 billion, maybe higher. They now live substantially in cities, although they can go back. So they are second-class residents of the cities already. They just don't have the entitlement to the same education the residents' kids have, et cetera.
Not so different from the illegal immigrants in the United States.
Exactly.
Performing vital work in the economy, but not necessarily receiving all of the benefits, and often getting reviled for their status and contributions.
Yep.
So that's an important area. This relates to labor market and social equity, a number of issues tied into that, that the government has expressed a desire, but may have challenges getting there, right?
Yeah, sure.
But we can see why that makes sense to do. Let's talk about another one of the areas that people have talked about making a change. China's, again, model of growth has been based on being the workshop to the world. Manufacturing, often at the low end, but we've seen a decade or more of rising wages in double-digit wage increases in the coastal provinces, which have been the heartland of exports. In addition to that, regulatory burdens, environmental and otherwise, willingly being put on in these provinces that want to upgrade the quality of the environment, for example, or as they have wealthy middle classes in Shenzhen and other zones, people don't want factories dumping toxic sludge on their children's drinking water. And so this is actually what happens as countries get greener, as they get richer, they get greener. And in bits and pieces, this is happening, raising the cost of doing business in these areas. So in some ways, we're nearing the end of cheap China. The government has said in this last 5-year plan, it wants to move towards innovative China. Talk a little bit about that, Michael. Can you help us understand the challenge of going after so many years with the one part of the economy focused on low-end manufacturing, now wanting to be a high-end innovative power? What needs to happen, and is it realistic to leapfrog?
Well, let me so zoom in. Probably put up some numbers that and pictures that showed you global supply chains are atomizing. So the way economies specialized is they get in exactly the right niches in these increasingly decomposed global supply chains. China's, the image, although this has changed fairly rapidly in the last 10 years, the image is China's in the labor-intensive, process-oriented assembly part of the manufacturing supply chains. And so what you just said is right. It's exiting from that. You do not have a comparative advantage in that as incomes rise to the current levels. Justin Lin, who couldn't make it today, estimates that about 85 million jobs in that category are going to move eventually over a time horizon we don't exactly know to other earlier stage developing countries. And that's scary, all right, because you can see that about to happen and you don't know exactly which jobs are going to replace it. So what China is going to do, I think the term used here is the smile, move up the value-added chain in these supply chains, both toward research and product development and downstream with global brands and whatnot. And that's well underway. It will still be manufacturing, but a different higher value-added part of it. The innovation part is really important. So there's a lot of components of innovative ecosystems that my colleagues at Stern know a great deal more about than I do. There's a public sector, investment component in human capital and R&D and whatnot, and we try to take that seriously. I think China's investing heavily in that. But Paul Romer will be here tomorrow, is probably the most eloquent spokesman. You don't get innovation without competition. And competition means not just price competition, it means entry and exit. If you don't have entry and exit, you don't have Google. You don't have Facebook. You don't, right? And that is a major issue in China because there is a reserved sector called the state-owned enterprises mainly. That model has a name that comes from the earlier part of the 20th century. It's called the commanding heights model. And it fails on dynamic efficiency and innovativeness. And so one of the key challenges in the next few months in China, I think you'd agree, is they've got to sort this out. They may decide to have state-owned enterprises. They may decide to have a huge state balance sheet on a continuing basis with a big challenge in managing public assets. But if a large chunk of the economy remains protected in one form or another from competition, and competition doesn't mean foreign competition, it means competition, including lots of new domestic entrants, then I think there will be a problem of implementation in that component of the plan.
Well, let's delve into this question of the role of the state sector in the economy, because it does really get to the heart of the reform agenda. Just to give some context, China did make a number of advances since the age of Deng Xiaoping and the reforms he instituted in reducing the role of the state. The number of employees, for example, in the state sector has come down. The number of SOEs, state-owned enterprises, has been reduced. And so if you look at a number of metrics, it would appear that and the share of GDP that can be directly attributed to these, the state sector has come down. And so there is a school of thought that says, where's the problem? China has already taken this on, and this is well in hand. But I wonder, this is an argument that I've taken up on the pages of The Economist, if we were to go beyond those aggregate figures and actually ask at the level of competition, for example, when you have an explicit state policy which has been grasp the large, release the small, was the euphemism used, that is to concentrate state-owned enterprises to become, in effect, national champions, very strong players that can dominate their sectors, and let small ones go bust or to be bought by irrelevant sort of private sector entities and fade to oblivion. You tend to have much more dominant monopolies or oligopolies. Rarely is antitrust scrutiny applied, for example, to SOEs. And so to the points that you make, there is a real disagreement amongst economists that look at China on whether the state is advancing or retreating, and at what level one should conduct that analysis.
Maybe I want to add 2 points.
Please.
In addition to what you say in terms of innovation and the importance of innovation in China. I guess cultural tradition, I guess most Chinese are more self-disciplined. It's good for self-discipline. But
what do you mean by that, please?
You know, they in the classroom, they like to listen what teachers say. They just follow the law. They don't want to take a risk to do something.
Deference to authority.
Yeah.
Right? This is traditionally, at least popularly espoused to Confucian values. Respect your elders, respect your teacher. Don't challenge your professor.
Yeah. Also,
how does that sound, faculty members, if your students didn't sounds pretty good, right? Yeah.
But interestingly, I found that yesterday in local Chinese newspaper, there's an announcement of a local law just passed for People's Congress. The law say if anyone made a mistake in innovation or tried to make something new, if he made a mistake with unintentionally, if some loss for public property, he can be waived of a criminal charge. It's very strange, also very interesting. So that means government try to create the atmosphere to tolerate some loss in the process of innovation.
And encourage experimentation.
Yes.
Right.
I guess that's the one point. Another thing is I guess the education system also should be reformed. I guess maybe that's the NYU of Shanghai can do in future, to encourage students to raise questions in the classroom, to raise questions in their research project. That's also very, very important. For myself, I feel if I sit a class in Chinese university, usually we just keep silent to listen what a professor say. In the classroom in the university in the United States, the professor keep asking questions. The students, American students, usually very encouraged to raise questions, but sometimes maybe it's too much.
Well, on that point, I want to encourage all of you to get your questions ready. As I promised you, this is going to be an interactive session. So in just a moment, I'm going to go to you for your questions. So let's get the microphone runners also ready. But before I do, let's continue just with this topic a bit further before we go to the audience. When we look at the reform agenda, what do you think might be the biggest obstacle? In some ways, there's an intellectual coherence to the kinds of things that have been put on the table. Is it the state-owned enterprises having vested interests? Or is it, for example, concern that reform might lead to instability in the markets? What do the two of you think are the biggest genuine obstacles that might slow or impede the reforms we're talking about?
For me, my side, we may have different views on this, but setting aside the complexity, and these, you don't get to do 3 and get most of the thing. You've got to do all 6. I mean, they're interdependent. I think, sorting out this complex of issues that surround the state-owned enterprises, what's done with their revenue, whether it gets to eventually to the household sector as purchasing power, competition, innovation, and the management of the state-owned, this huge state-owned balance sheet. That's a very complex set of issues, but there's lots of places to trip and fall on that. And the other one is this debate about the role of the state. The Chinese policymakers look at the West and they see state balance sheets with large and rising sovereign debt levels, even larger non-debt liabilities that in America we call entitlements, and virtually and no reporting at all of whatever assets we might have. And they say, that's just a model that we're not going to follow. We have a big balance sheet. We admit that we can mismanage it and mess up the performance of the economy, but it serves us well. It enables us to invest at high levels. We have much better shock absorbers with respect to internal and external shocks that you'll hear more about in the course of the conference. And so we have to, and somewhere in there, there's a conversation going on about inventing a different sort of model that has to do with the balance between the states and markets. The last thing I'll say is that one way that you hear often in China about the challenge is on the market side, we need more markets. On the social security side, we need more socialism. So the simple description of China is more markets and more socialism.
Excellent, excellent.
I guess the mentality for reform had been different from now relative to 30 years ago. Back at the end of the Cultural Revolution, almost everyone they have a very strong motivation that China have to be changed in some way. But now is different. But some interest group, as you point, maybe SOE, but not only SOE. In some way, maybe including everyone. I can give you an example.
Please.
There's a debate in Beijing, even in Shanghai, how let the kids of immigrant worker to easier for them to take the exam, entry exam to university.
Right.
But they have some interest conflict. Usually the university located in Beijing, Shanghai, they give more quota to local people.
So the obstacle is not just the fat cats, it's also the tiger moms.
Yeah.
Right.
So there's a debate on the internet. Someone say, hey, we make contribution to Shanghai, let Shanghai better city, or in Beijing better city. Why you guys just immigrate to Shanghai or Beijing just for 2 or 3 years? Your kids can get the same benefit like us.
Sure.
That's a bigger issue. So what I try to say, government should educate the people on some common value, because the people was born equal. If they have the same concept, that will be easier for them to overcome their difference. Otherwise, it's very hard to continue reform.
It's a very powerful idea you put about common values, a social contract. It seems the new leadership might be trying to express that with its idea of the Chinese dream, or the China dream, which has been a very recurrent language used by the new leadership. We don't know all the details of what this means. Maybe even it might be a part of starting a conversation. But if there were to be some common agreement about what it means to be Chinese as a society, what we all owe each other, as it were, as Chinese citizens and residents, then it might be easier to make some of these more difficult changes. So let's see how that works. But that is a lever that leaders, true leaders can use. Let's go to the audience. I see a hand in the back. Again, just a couple of ground rules, as ever. Please identify yourself, and just for fun, tell us what city you reside in, and make it a good question, please. No gas bags here.
I'll try my best.
Okay.
I'm Sanjeev. I'm from Bombay, MBA 85. We talked about driving consumption, and I just wondered, I don't know the data, but does household ownership as a percentage have a significant impact on driving consumption? And I guess that correlates to availability of mortgage finance. I mean, I know in the US, for example, 60% of retail assets are mortgages. And then from an emotional standpoint, if you own your home, then does that, help you drive consumption in other ways? So I just, the ownership of households and its impact on driving consumption.
In the US and the UK, we saw the wealth effect of people perhaps artificially feeling wealthy from their unaffordable homes. I do know that the levels of leverage are much, much lower in China, partly by cultural bent. People like to pay cash, but also by government policy, which has been tightening. Michael, do you want to talk about this? What do you see to the gentleman's question?
Fairly rapid increase in household ownership, but it's complicated. If the supply doesn't keep up with the demand, the prices go way up. And because it's a very powerful instinct in the culture to save and own these houses, it can actually crowd out other forms of consumption. You see this dramatically in Korea. If you read the latest McKinsey Global Institute report on Korea, by the time Korean households have finished spending a massive amount on housing and a massive amount on their kids' education, which is another culturally driven value, there isn't much left over to build the service industry that they need to complement the, the kind of high-powered tradable sector they've got. So I think, there's an important part of the policy discussion here, which has to do with urbanization, which is, getting the right mix of housing. And there's another part of the agenda which has to do with the financial sector. Right now, you can invest at negative returns in bank accounts. You can speculate in an amateurish way in relatively illiquid stock markets, or you can buy potentially overpriced housing. And most people think that's not quite the right array of savings options for people in the long run. So you may see some of the real estate investment driven by the absence of alternatives in the.
What do you think about the housing question? And if you could go on and also answer the question that the skeptics ask, and that is whether there's a massive housing bubble waiting to collapse here.
Yeah, I was told that the ownership of housing in China is 80%, but I don't know that the data is accurate or not. I don't know how they calculated the ownership. Of course, they will include all of the house in countryside. But
so a lot of that is low-grade housing stock,
yeah.
Where as soon as people can afford it, they'll try to get into better housing stock.
Yeah. Another thing is, as a Michael point, the cultural tradition make Chinese don't like borrow money. In many cases, I just talked with the one vice governor of a bank here. He said the problem for bank is the borrower pay loan too quick. Because they pretend to borrow money from their family member to pay that quickly. That bank lost the chance to earn more money.
Right.
That's the one thing. Another thing is at one point, I guess most foreigners don't maybe know that. Why there's so many people can own house. Before the reform, the government distribute house to every employee, not everyone, but some of them. They, of course, not own. They just say, we stay here. But starting housing reform maybe 20 years ago, the government allowed them to buy the house at a very low price. They have some formula. For example, how many years you work for government, how much your salary. They have a formula. But generally, the price very low. So almost everyone, if they rent a house, they just buy out.
Now, this has been argued to be one of the greatest transfers from government to individuals in history.
Yeah.
And in many ways, I think explains a lot of the dynamism of the years that followed.
Yeah, if you own apartments in downtown Shanghai, maybe 10 years, the price go up. You can sell it. Right. Then buy a little bigger house in the suburb of Shanghai. That's the way usually the resident of Shanghai.
But I'm going to hold you to my question before coming back to the floor. Is this a giant bubble about to burst?
I don't know. It's very hard to say. Always for me to make any judgment for housing price, because you look at the other city in Asia, Hong Kong, Seoul, Tokyo, Taipei, everywhere, the price of house very high. I just really hard for me to make a judgment.
Michael, you're shaking your head.
I don't think it's a dangerous bubble yet, but it was getting pretty close.
Getting close. Okay. Let's go back to the audience. Do we have another question? Okay, all the way in the back to my right. Ladies and gentlemen, please identify yourself.
It's not
Sorry,
on.
let's get the microphone on. Should be automatic.
Hello.
There we go.
Alumni from Hong Kong, class of 2006. China has a rather close financial system, capital account control. And in a way, this shielded the country from the financial crisis 98, 2008. Do you think China is ready to open it up or include the financial relaxation in this round of reform, especially integrated with the world financial system?
What did you answer?
It's a good question. Also, the question with a great debate now in China among the Chinese economists. The one thing I guess most of them agree, we should do more domestic financial system first. For example, we should more to liberalize the interest rate. But so far, the government regulates very strictly on the interest rate. But last year, they did start to let the commercial bank to make some decision on the certain level, on the deposit interest rate or loan rate. My feeling is the Chinese government will continue to do that. Also for the foreign exchange.
Well, before you go to foreign exchange, just for those in the audience who are not intimately familiar with the banking system here, the government tightly controls interest rates, historically has done, and Michael referred to this. It's a form of financial repression in a way because ordinary households earn, in effect, negative real interest rates through the state banks which dominate the sector. In effect, it's a way of channeling capital to favored firms, typically state-owned firms. But this has been changing a little bit. A little bit of liberalization. The wealth management products that have crept in allow some sort of competition among banks. But it's unclear, not well regulated. And in the last few weeks, some of you in the market would have been very closely following. The interbank lending rate here has gone through the roof and has been quite volatile. It has made people wonder, what exactly is the People's Bank up to, that is the central bank? Maybe you can give us a little insight. What's going on?
I'm not a representative of a government, so I really just...
Is it a sign of bigger changes to come? Is that what's happening?
My guess is now China in the dilemma, because if you keep losing for monetary policy, they worry about the QE, due to the QE in developed countries, more hot money will come from outside into China. So that's the reason I guess central bank don't want to lose the money control. I guess at the same time, as you described, the money supply very tight in past several days. I guess that's the reason.
I'm going to put our Dean on the spot because we're talking about capital controls, and he talked about Chile in his presentation quite a lot and the experience of Latin America. If we can get a microphone here to the front table, please. If we could ask you a little bit from your experience. Chile very famously went against the Washington Consensus in some ways by imposing capital controls during its period of growth because it was concerned, as China is today, about hot money, about speculators coming in and coming out, washing in and out. Malaysia also did something like this, but less effectively than Chile. I wonder if you could give us your perspective as China grapples with this question of how quickly to liberalize the capital account and the genuine concerns about speculative flows destabilizing markets. Can you give us any lessons that we might have learned from Latin America?
I think the key lesson from Latin America and more generally from the experience of the emerging world is that the concern over capital flows really needs to be separated into two categories. You need to distinguish debt from equity. So almost any financial crisis you can look at in the last several decades had its origin in too much leverage. So very hard to think of a crisis that began in the equity market, for instance, or in foreign direct investment. And so countries really get into trouble when they get over leveraged, when they liberalize far too quickly, the ability of domestic firms to borrow in short-term dollar-denominated debt. And so really the key lesson is you want to promote investment in portfolio equity and foreign direct investment, things that promote risk sharing, but go very slowly on debt liberalization.
So that suggests China's caution on this front is justified, you think?
Caution, I think, is the right word.
Interesting. Please.
I guess another word should be gradualism. That's the philosophy of Chinese. They want to do things gradually, to try something, whether something wrong or correct. So if you look at the future of opening up of capital account, my feeling is that's the final target. Chinese government make decisions. They want to do that. But at the same time, they are very cautious. They take a gradualism, step by step. This year, they may be a little bit liberalize something. For example, they may allow individual investor to buy some kind of stock overseas, maybe under some condition. That's, I guess, probably that will be done very soon. Right. They also maybe allow some foreign institution to issue the bond, Chinese bond, they call Pandan bond in China. That's something not too much influence on the whole situation. I guess Chinese government will do that.
Let's see if there's another question from the floor. Do we have a hand anywhere? Somebody from the markets maybe who wants to challenge one of our panelists. I know a lot of you are obviously finance grads working in Asia region. Anybody have a perspective on what's happening in China? Remember, let's take to heart the lessons about innovation in China. We don't want to be too Confucian. Challenge the experts on stage. So I'm going to come back to you in a few minutes and might challenge you to come up with a good question. Meanwhile, let me pick up on a point you made, because this idea of gradualism and experiments, it actually reveals something about the Chinese economy and the way of governing that is not apparent to people who don't look at it closely. To outsiders, people think Beijing is all-powerful, and of course, the regions are enormously powerful, and many edicts are issued by technocrats in Beijing, for example, on environmental issues that are blithely ignored or partially followed by provincial governors and mayors. And in terms of experimentation, there is a long history since Deng Xiaoping of trying lots of little pilots, many pilots, and some of which, like the special economic zone in Shenzhen, are picked up and expanded. Right now, their property tax, which is a very interesting reform that might take place here, is being piloted in several cities, including Shanghai. And so the system is nimbler than it might appear. And those of you who are experts or students in innovation will know that experimentation, rapid learning cycles, learning from failure, learning by doing, these are all characteristics of innovative organizations. So there is this odd hybrid of a top-down system that has 5-year plans, that sounds very old school, but at the same time, it has nimbler aspects in some of its implementation. Please.
No, I think that's a fair description, but I think of it in a slightly different way. The process of development is a process of living in an environment of constant change where, frankly, you don't have models that tell you what's going to happen. And so I think part of this, and we've learned a tremendous amount from China and its experience, is adapting to navigating with imperfect charts. And
isn't that the history of development, though? China's not special.
Well, but it's raised it to a fine art. I mean, I think this is an element of what Peter's talking about in turnaround. You know, you respond to the hand that you got dealt. And I remember in the early stages of talking to the old timers in China, you know, when the advanced countries had economists with models, and this economy was emerging from being centrally planned, and the notion that you could take an advanced country model with fully developed capital markets and all the other stuff and use that to predict what the outcome of policy decisions would be was something they knew was silly. And so they didn't throw models out completely, but they kind of used them with a certain amount of skepticism, and it's a mindset that I think Peter and I agree we wish we had more of now in the advanced countries, because we face evolving structural challenges that put us in a way that hasn't been true for much of the post-war period, in a period where we don't actually know how to deal with the income distribution issues, how to deal with the structural change issues. My stylized way of describing this is in the advanced countries, we have a kind of quasi-static view, and our approach to a hard problem is debate and debate and debate. I call it debate and wait. And the developing countries, especially the successful ones like China, seem to me to act and then learn.
Yes.
Let me add one episode. I guess 2 or 3 years ago, Jeff Sachs, the professor of Columbia, had a lunch here in Shanghai. We get together. He said, I can tell you one episode. He said, one day I walked into the office of Larry Summer. I asked him, what's your plan for reduction of corruption Larry Summers said, come on, we are not socialists. But Jeff Sachs said, but U.S. government made a commitment in the Atmosphere Congress in Copenhagen. So what your plan to finish your target?
Gases. Right.
That's very interesting on the difference of philosophy, I guess.
The point about the environment that you bring up, we have just about 5 minutes, so maybe we can just spend a moment on that, since we're all breathing the air here in Shanghai. All I can say is, as a new resident of the city, be grateful you're not in Beijing. This is the greatest thing one can say about the air quality. But this is a difficult challenge, isn't it? I mean, the resource challenge here, whether it's energy or more broadly, natural resources, commodities, food. This is a country that is so vast with such huge appetites. Managing its resources, trying to manage the urbanization process in a way that cities are resource efficient rather than urban sprawls or suburban sprawls, worse yet, exurban in the American model of the Southwest. What hope do you have that this is actually going to happen here in China? Any evidence from, you've worked closely with the government, of course, in the past. Tell me what do you hear and see, Michael?
Well, I mean, I think that if you read the 12th five-year plan, which, as you pointed out, is not a plan, it's a set of priorities, you know, there's a very aggressive assault on environmental issues of a variety of kinds, on energy efficiency for sure. I think the realistic truth is that in China and the developing world, where most of the growth in absolute terms is going to come from, we're going to have a foot race between, certainly in the climate change area, between energy efficiency and other things that have to do with green, you know, carbon intensity of energy. On the one hand, and growth. And in the short to medium run, growth is going to win. And I think there's a realistic understanding of that here. That doesn't mean we shouldn't do anything now. It's just kind of realistic. But
well, when you say short to medium term, it was back in, I think, 1992, the World Bank issued as an important world development report that looked at the question of growth and greenery. That was quite influential to the Chinese leadership of the time. And they began to incorporate the language of green growth and targeting and so on. 92 to 2013, I think we're into the medium term now, right? It's not just short-term trade-offs in favor of growth. It's been a long time that growth has won out. When do we begin to see that green growth that's been officially on the books in China?
well, you have a lot of trees in Beijing that you didn't have before. No, I mean, look, you know, that's true. But in 1992, the per capita income in China was probably somewhere around $1,600. You know, when you grow to 6,000, you're going to be increasing your energy consumption, and we're not anywhere near done with that. Look, I mean, the scary thing is, and China's big enough to have internalized some of this, not all of it, but some, is that there's a pretty good chance we're going to triple the size of the global economy in the next 25 to 30 years, if you just project out the growth. And that's scary. I mean, but, you know, lots of people in this room and outside it think that there's some question about the natural resource base we have on the planet is okay at $70 trillion of per capita, but I mean, not of total, you know, economic size in the global economy, but that's not where we are. And so that's why I say the reason there's some urgency about making aggressive efforts on these fronts is because somewhere around 30 or 40 years from now, we have to have a growth model globally that is consistent with the natural resource base that we have. We don't have to do it tomorrow because we're not there yet, but we're going to get there.
I guess government, particularly government in large cities like Shanghai, should provide more public transportation to reduce the usage of a car, because car is the main source for pollution. Another thing is regarding the changing of taxation. The taxation on the resource should be shifted from based on volume to based on value. That will to reduce reduce the incentive for local people to get something out from us. Another thing is, I guess, government should make more investment in energy-saving technology and green technology. That's also very important. Maybe that's one of part of the resource for future development in China.
So,
can I add one thing?
Yeah, a quick rejoinder. We're almost out of time.
Okay. If you look at the lists of very high return in terms of both financially and in terms of impact, building buildings that are energy efficient is somewhere near the top of the list.
Right.
And China, you know, is urbanizing, right? So it doesn't have to retrofit all this stuff. I mean, there is a huge opportunity to save massive and massive amounts of energy if the right codes are put in place. And I agree with Yide. I think, you know, there's that and 2 or 3 other levers, and you could transform the trajectory of the economy in terms of environmental things and energy
On that,
efficiency.
the McKinsey Global Institute did a deep dive on the question of efficiency, and it was pretty clear of all the things, there were enormous gains, low-hanging fruit, things like building codes that are not very glamorous or sexy, like building lots of solar farms, for example, but that are much cheaper, but where there often is market failure or there requires action, joined-up action between public sector, private sector. It might be regulations, it might be building codes, and often it involves fixing incentive problems. That is the alignment of incentives problems that there are in different sectors. And on that note, I just want to make one small point about incentives. A recent study published in the National Bureau of Economic Research showed that mayors and other local officials in China who invested in environmental projects were promoted at a significantly lower rate than those that invested in ungreen infrastructure projects, or more broadly speaking, GDP growth, which is one of the metrics by which party officials get promoted. And so incentives matter. I think it may not be surprising to hear from a panel of economists and a man from The Economist, incentives matter, but it's one of the important tools in the toolkit. With that, I'm going to bring this panel to a close, and we're about to retire to lunch in the next room. Please give our experts a wonderful round of applause.